All right, good evening, class. Thank you for joining today's meeting. So actually it was supposed to be a class, but I just felt like it's going to be quicker for me if I can just make a recording of this session and we can get done with this quickly. Okay, so please, if you are saying this, I would like you to make a screenshot of what you can see on my screen. So last week, Thursday or Friday, I said we're going to have a class. We're going to hold a class on how to spot trend reversals, right? And I've titled that "No Struggle Trading." Like that's the alias for this, "No Struggle Trading." And I think I intend to incorporate this one because this is something that I have noticed, I've worked with, and it has really worked for me, very well in the markets, And yes, I would say I won't say it is 100% perfect, but um, what I would say is that I am more conscious, right? It's kind of reduces burdens for me. It reduces my struggles in trading, right? And I don't hop on the market every time. I don't hop into the market every time with this. Okay. So so like I said, please make a screenshot of this. It's going to help you because when I start navigating through my screen, you might not be able to see this again. Okay. All right. So this is what we are going to be discussing. The first thing is I'm going to be talking about moving averages and how to install them. Right. So how I spot my trend reversals, and trend continuations. It's using, let me add this and then continuation and continuations. Okay. So the way I spot my trend reversals and trend continuation is what are you is by the use of the EMAs, the moving averages, right? When I say EMA, I know some of you that are my students, you must have heard me say EMA very well. EMA is just something as moving averages or exponential moving averages, right? So I use them and these are the EMAs I have installed on my computer system. So this interface you can see here, this is the XNES MT5. This is XNES MT5 framework. Okay, this is XNES MT5. So you can install that. It's free. Just Google it, XNES, download XNES MT5, install it. Then I'm going to show you how you install your EMAs. Then how to use them to spot reversal patterns and bounces of the MA. So reversal patterns are majorly for trend reversals, and then bouncing off means trend continuations, right? And I do that solely. I'm going to analyze that solely on my H1 on the 1 hour time frame. On the 1 hour time frame, right? So please bear in mind the EMAs I said you are going to be installed 5 EMA, 13 EMA, 50 EMA, 200 EMA, 800 EMA, and 3,200 EMA. So that's 6 of them in all. Then the third thing we're going to be discussing is how to work with the strong EMAs. That's the 50, 200, 800, and 3,200 EMAs. I intend to make this only a 30 minutes video. So I'd like to be very fast. So probably you might have to replay this for you to get it, but it's very, very simple. Trust me. All right. So, sorry. Uh, okay. All right. So how do you install EMA? So you just come to, I like doing something. I like having my, let me close this. Okay. So I like having my market watch here. So you just go to charts, your market watch is it charts now? Uh, let me see. Where is it? Where is it? I think market watch, you can just install it by putting Control M. Then my data navigation, my data window will be here, right? So, and people that know me, people that are part of my signal group and all, they know that I usually call my trades from only gold, mostly gold. So there are times that, okay, maybe I spot opportunities on US30, NAS 100 or GU, I can call them too. But let me say for the past 3 weeks or so, I've only been making trades on gold, right? And gold is my favorite pair. And let me say it's easy for me to work with. Actually, what I'm going to teach you today works it works best with gold. Okay, so I think it could work also in other areas, but I'm not I'm not focusing on them. Okay, so I've deleted the stuff. So let's go purely into what we want to do. So remember that I'm taking all this analysis, I'm taking it solely from my H1, that's 1 hour time frame, right? 1 hour, in fact, the 1 hour time frame is works magic, 1 hour time frame with your EMA works magic, right? It works very well, of course. So if there is any failure that you notice, it's usually failure of you not being able to interpret, excuse me, you not being able to interpret the market condition correctly, or excuse me, either you are not able to interpret the market condition correctly, or you are or you are too optimistic about the markets. Either you're being too optimistic or being pessimistic, right? So trading. I believe trading is simple. It's just that the price it comes with is that it comes with the cost of your money. Nobody likes to lose money. And then, of course, the movement of the candles, the imbalances, they cause a lot of stress. They could cause stress. Okay, and one other thing I want to add before I continue is that this, this what I'm trying to show you here works regardless of the strategy you are working, the strategy you are trading. So this is not like a new strategy. I don't say this is a strategy. I'm just saying that, okay, this is how to spot trend reversals. And okay, and if you are someone that is open to how will I say it? You are open um to expanding your understanding, taking things beyond just, okay, being strict with your strategy, you know, you can actually employ this. You can just exploit this to just spot trend reversals, to know when the trend is reversing, how to take advantage of it. So it's a strategy of the sort, but I believe you just know what I mean. You can just take advantage of it. Don't really consider it a strategy if you already have a working strategy for you. That's what I'm trying to say. Okay. Okay. How do you install your EMA? I told you that the 5, 13, 50, 200, 800 and 3,200 EMA, they're the most important things. So you go to your inserts and then indicators, and then you come to trend, and then you come to what? Moving average. So the moving average, so the first one you start with is 5, and then there are specific colors for them. So for me, I have already installed um my EMS. So usually for 5, I use the color red. So color red. And then I change the method. Maybe on your own screen, the method is simple. I change it to exponential. So that's why you hear me say EMA, EMA. EMA just means exponential moving average. Okay, so I change it to exponential and I apply to close. Not open, not high, not low. I apply to close, right? This shift remains 0. And my style is color red. And then the pixels, that's the thickness of the line of the EMA, is what? 2 pixels. So I choose the second one. That's all. And I click OK. Okay. So let me see. Maybe I should let me delete my indicators for now, so that you'll be able to replicate the same thing. It won't be like I'm spitting gibberish. Okay. All right. So I have a plain text, a plain interface now. So I go to insert indicators trend, then I click on my moving average, and then I choose 5, change it to exponential moving average. The color I'm trying to choose is the color red for my 5 EMA. So color red, I click on it. Okay. So my 5 EMA is color red, and then indicator trend, moving average, then 13. Okay, I think I've installed, I didn't clean that off before. So my 13 EMA is color yellow, right? So I click on that. And then, so I've installed 5 and 13 EMA. I come to again to indicator trend, and I come to moving average. And then the next one is 50 EMA. 50 EMA. Remember that the method I'm choosing is exponential, and I'm applying to close. So my 50 EMA is aqua color. Aqua, like something like light blue you get. So, okay. So that is installed. I've installed 3 out of the 6 important EMAs. And then my indicator again, trend, moving average. And then I want to install, that's 200. Now, from 200, from 50, we go to 200. That's times 4, right? So my 200 EMA is color white. So personally, I prefer to use, these are the colors I prefer to use. I've been using them for about 2-3 years now, about 2 years. So I already know them by heart. So I don't know if you want to change to another color. This is what I use. So 50 to 200, then that's 50 to 200. That's the difference of 4, multiples of 4, right? Then 200 to 800. Then this 800, I'm changing it to color blue. Okay, the dark blue color blue. So that's also installed. So this, you can see this, my 5 EMA, 13 EMA, 50 EMA, 200, 800 EMA. Then the last one, the last moving average I want to install is the 3200 EMA. 3200 EMA. So that's your part of them. So, and the color I'm going to use for that is color green or color lime, whichever one. Okay, remember it's also exponential close. Okay, so that's also it's already been installed somewhere. Let me see. It's been installed somewhere. Okay, so you can see it already. So this is the 3200 unit, right? So this is very simple. Okay. Now, how do you apply this? How do you apply the EMA? Let me expand this. Okay. Now, if you are someone that is interested in swing trading, I'm interested either in day trading or swing trading. What is important for me is that I want to make money. So I really don't mind if it is day trading or swing trading that I'm doing. Okay. I'm actually more interested in if I'm making money from something. That's what interests me, really. Okay. And then remember I said that this is a no struggle trading, right? A no struggle trading. So let's do some back testing with this thing. So this is how the EMAs work, right? On my 1 hour time frame, remember I said that I'm working solely on my 1 hour, right? On my 1 hour time frame, you will see something peculiar here. And what you can see is that you will see bouncing off from one EMA to another. Of course, they are separated by time, right? So when you see this, these are grid lines. This shows the beginning of a new week, right? So this was Monday, July 29th, right? And then you see, of course, this requires patience. Each of these candles is 1 hour. So you can see it. What I'm looking for is a reversal on my EMA, a reversal on my 200 EMA here, right? And you will notice that this actually happened very fast, right? Now see, Sorry, I need to attend to something. Give me a minute. Please give me a minute. Okay. All right. So okay. So this is what I'm looking for. There was this bounce. Okay, this first looked like it was going to break through it. When the market opened around 11 p.m. on Sunday, Nigerian time, you can see it broke through here. And then there was this candle or this candle. And then after this opening candle, the third candle after it, it caused what a major reversal like this pump. Right now, when I see this reversal pattern, this reversal candle, and I can see that it closes below. It closes below these last two candles, like into the half of this. Now, and I see that there was this bounce off from the EMA. I can enter myself from here. But remember that this is your Asian session. This Asian session, it might still be, if you're a Nigerian, this is like still in the early hours of the morning. So you can actually ignore this. Okay, so if I want to take this trade, it means that I will enter my buy position here. Sorry, my sell position at the opening of this next candle, of this small candle. That's 2392, and then put my stop loss as the high it has established earlier. My stop loss is at 2403. So that's about 100 pips, right? On gold, 100 pips. Okay. And then I take a sell, and then I know that, okay, is that I take my profit on my 50 EMA, as my 50 EMA, right? Or I take it here, depending on what it's going to do. So if you take your profit here, from here that you entered to this place, here you entered at the open was 2392, and then you closed it here. When it took you put your stop loss where it hits the EMA here. That was the close here. The close here is what 2393 also. What the open here was what? Open here is 2392. 2392. This candle. 2392. Okay. So yeah, this is what I wanted to check, Jerry. So the close here was 2387. So you just have made 80 pips here. But you can see what later happened. You came back here, and then that's if you are someone that wants to hold it. If the way I trade, if I'm trading this, if I'm using this system of trading, the way I trade is that is either it's my take profit or it's my stop loss. That's what is on my mind. Either it takes my stop loss or it's my take profit. Okay. So if I put my TP here, it means I will only have made 60 pips, right? But risking 100 to make 60 may not be a good bet. But if I put my stop loss here, my take profit here on this 800 EMA, this will have been, what was the close here? The close was 2376, which is that's 2393 minus 2376 is about 170 pips, right? So that's 1:1.7, which is a good one, right? Which is a fair one, not a good one, a fair one, right? And then see what happened. Usually, this is what I have noticed. If you see a reversal, whenever you spot a reversal on your 200 EMA, your 50 EMA, or your 800 EMA or 3200 EMA, it means that the market is going to go in the opposite direction of where it was coming from. Now look at what happened. This one came here. Now don't be greedy. Don't follow. You don't have to follow it to this spot, right? The market is just trying to test. It's just trying to test a particular liquidity here, and this is what it's doing. You can see. So these places. Let me see. Let me see. I want to increase the bit. Okay. So the market was trying to test this liquidity. You don't have to follow it to do that, right? You know, what kills us traders mostly is our greed, usually our greed, right? Fear does not, in fact, fear may not make you make money, but greed is what really kills traders, right? So just put your stop, your take profit here. And usually with this system, if you are making a single trade per day, you are good to go. If you are making money, taking just one trade per day, you are good to go. Trading does not, see, what is important in trading is making money. And if you make it once, like now, this trade ran from early in the morning, around 1 a.m., 2 a.m., right? And it ran till 5 p.m. That's a whole day. You made 170 pips a whole day. Of course, this is because this is a Monday. If it were other days, it will make sense, right? Now, that is for on a Monday, one trade is good. In fact, on a Tuesday, Wednesday, one trade is good if you are able to catch profits, right? So take your profits and go and sleep, right? Except if you see this and maybe if you are able to spot this and make sure that you have a constant number of risks. If you are risking $100, don't shift it to 200 because you have made $200 now. You now want to now risk $200. It doesn't make sense. Just let your risk become normal, be normal. Okay, so take your entry. If you are able to spot this, you saw this reversal, and you saw that okay, the next candle that opened, the next candle after this reversal candle, well, is a buy candle. Like it closes above this EMA. Take your buy, put your stop loss here. Now your stop loss here will be your stop loss for this trade will be 23.69, and then if you open at this new candle, this one. This is the open here is 23.76, which is good. Whenever I'm using this strategy, I don't like risking more than 100, between 100 and 120 pips. I can risk lower, in fact, lower than that is better. But I know that okay, I shouldn't risk anything up to 150 pips. If it is still 100 pips, okay, the risk is still okay, right? It is typical. Let me say it is typical, not okay. If it is 120 pips, it's still typical, right? Because you are talking about reversals and you are talking about gold here. 120 pips, 130 pips is still okay, but not up to 150 pips, never ever. Okay. So if I take this trade and put my stop loss here, and that okay, I'm trading up to my I'm trading up to my top 200 EMA again. So from 2376 to here, to this point, this is 2395, where it was coming from before. That's about 190 pips. So I'm risking, excuse me, let's quickly do a quick math. Okay. So my SL is what? 2376 minus 2369, which is equal to 70 pips. You know, remember we're talking about good. And then my TP is what? That's 2376 minus 2395, which is that's about 190 pips. 190 pips. So this alone, this risk reward ratio is about 1:2.5, less than 1:3, almost 1:3, right? This is very good, right? But look at what happened. You took this trade in the late hours, around 5 p.m. Nigerian time, and then what? You see it's your TP where? It hit your TP here. That was around 1 p.m. the next day, right? So within 2 days, you have made about the first one we made was 170 pips, then 190 pips, that's 360 pips, right? Okay. That's if you now decide that okay, now if you are able to see this now, you see this, it, then it's bounced back into your 50 EMA. Now, there's this candle. See, everything here is about risk. It's about, okay, how much are you willing to risk for this trade? if you can follow this system, is about, okay, how much am I risking? Now, okay, just to reiterate that we are talking about trend reversals, how you can spot trend reversals and trend continuations. Now, trend reversal happened here temporarily, right? It's changed from buy, it was coming from buy here, then from here, it started selling. Then what? You spot another trend reversal here, right? If you are wrong, you just have lost like 70 pips here. Then you take buy, you take your buy, and then it keeps going. You can see it keeps going. Okay. But before it kept going from here, when it hit here, you made 190 pips, right? And then you see a reversal. Now, this bounce back did not bounce back into your 800 EMA. It's bounced into your what was this called? Into your 50 EMA. Your 50 EMA is the light blue color or the aqua color, right? And see what happened. When this happened, bam, it entered like this. Now, I took this trade on this particular day. I took advantage of this trade and I made about 500 pips on it. About, I think, 430 pips because I entered here. I entered, yeah, I made about 490 pips actually here. When I saw that this happened, it came here, pump, and then the next candle now took it from 50 EMA, it took it above. It took it above the 200 EMA. Now, this 200 EMA, it closed above all the highs it has created for 2 days, right? Remember that usually the Monday just comes to give you an initial low and high for a week. Monday only gives you initial low and initial high for the week. It is the other days that will determine the new high and the low of the week, right? So when I saw this is the reversal, this was a big reversal from here. I also took my buy from here. Immediately this candle closes, I took my buy at 20. I think I entered at 24.01. And I put my stop loss here. My stop loss was here. So my stop loss was at 23.83, and my entry was 24.01. That's a difference of about 170 pips. Yes, I guess. That's almost 180 pips thereabouts. That was where I entered from. And then now, if you see this kind of stuff and you enter, and how do you know that it will keep riding along? Now, remember that we are on our 1 hour time frame. Here, I'm not looking at any other time frame. I'm only looking exclusively on my 1 hour time frame, right? And I'm trying to trade as peacefully as possible, as peacefully as I possibly can. Okay, so I enter my buy, and it keeps going. Now, of course, trading, you don't expect you don't expect that you always have smooth runs in trading, right? It's hardly possible that you always see smooth runs, but especially if you are trading gold, anything you are looking for, you can make that money within 2 days, sometimes within a day, right? Like trend, you always see a continuation of trend within 2 days, like in 2 days, 2 consecutive days or 3 days, right? This system I'm teaching you, I don't want to call it strategy, I don't know why, but this system can help you to make, like, you can pass prop accounts easily with this. I'm telling you, right? Now, I fumbled in some places. I was able to make some progress, for that was 2 weeks ago and 3 weeks ago. But last week I made some mistake. The market did some manipulation around these areas, right? But I remember myself and my team, I caught about 400 pips plus. My team caught about 120 pips, just trading between, I think we entered here that day. I can't remember where we entered. Yeah, we entered here and then they closed around here that day. Okay, this was like a Wednesday. Okay, so please just take it easy, right? Okay, so if I entered here, of course, because I saw, excuse me, because I saw that this candle This candle is a bullish engulfing candle. It's closed above all the high. It's closed above the high of almost 2 days now. It's closed above it. I entered by here, put my stop loss here, 170 pips. Now, this is one abnormal. I told you that you don't risk more than 120 pips, right? 130 pips. But this is one of the abnormals, right? That we can see in the market. Now, in this kind of case, what I will just do is maybe I will just reduce my risk. If I'm going to take this trade, I'll just reduce my risk. So I enter here, but I know that because this is a bullish engulfing candle, right? There is every possibility that this market keeps buying because of this singular property, bullish engulfing. If you are someone that is conversant with candlestick reversals, you know what I mean. So if you enter here, okay, how do you know when to get out of this market? Now, of course, if you take this trade, this is already a swing trade. This is swing trading because you are swinging into another day entirely. Okay, so enter buy from here. Now, when do you leave a market, or when do you spot another trend change is about to happen? Now I'm going to tell you that. So for this trade, I closed this trade as 24.50. Yeah, this was where I closed it, and I was right. Boom. Now, if you see this kind of opportunity, you're able to make about 450 pips, 300 pips, 200 pips. If it reaches your place of satisfaction, it's better you give the market like a 24-hour treatment. And that is the hardest thing. The hardest thing about trading is you sitting on your hands, you not taking any trade for some time. After, usually when we see that we have made some success, we just feel like, okay, we are invisible, we want to go in, but you don't have to go in. Savour your win, go out and play. To me, see, I will be very honest with you, it is very difficult for me to go out and play whenever I've made money. I am just looking for another opportunity to enter, but it usually ends badly, and it's one of the things personally I'm still working on to overcome about myself. So this trade, 24.50. Now 24.50 was a liquidity zone. If you check the higher time frame, I don't want to go into higher time frame now, right? If you check the higher time frame, it's a liquidity zone. Let me see, 24.50. Let me spot it somewhere here. 24.50. 24.50, yeah. So this is it. You can see this place. It is an eye of a particular. I'm checking this from the daily time frame. It's an eye of a particular time frame, of a particular day. So I knew that the market is likely to stop at that point, and it did, temporarily before the day closed. So I'm going back to my 1 hour. Okay, so look at this. Just leave the market at that point. Leave it. And this happened around. This was in the nice time around. This was around 8 p.m. that day. I remember. Just leave it, leave the market and give it a 24-hour treatment. Okay. But if you find yourself, okay, that you feel like it's still going to go up, when do you know that, okay, you have to just leave? When do you just know that you have to leave? It is when you see this kind of, when you're noticing this kind of pattern, but the main thing is when you see that the markets, the candles are falling, but two candles are falling into your they are falling below your what do they call this? What do I call this one? This is below your 13 EMA, right? Remember that our red moving average, the red is the 5 EMA, and the yellow one is the 13 EMA. Now there was a first candle close, right? A first candle close on 1 hour into your 13 EMA, and then there was a second candle close into your 13 EMA. This shows that the market is about to reverse. Trust me, it works like magic. Okay, that means that a sell trend is about to start. But of course, there was manipulation last week. I guess because of the NFP. Because the NFP was coming. This happened on Thursday. This happened on Thursday, and then NFP was going to happen on Friday. So they did a lot of stop hunting, right? Normally, when I see this, I think I entered this trade actually, and it's turned out badly. I entered sell from here. I put my stop loss here, and of course, like I said, this is one of those cases where it turns out badly. I entered at 24.33, sell at 24.33, and I put my stop loss here, just to give it enough breathing space. This is 24.48. That was the high, and that's about 160 pips difference, that which was bad, right? In fact, if I had placed my stop loss here at this high, that's 24.42, this will have just given me about 90 pips, right? But I just felt like, okay, in case there wants to be another retouch and all. So it ended badly. This trend, even though I have made gains, from this day, I suffered loss here because, of course, the market was stop pointing. So it's not supposed, it's on a normal flow and trade flow, it's not supposed to happen. But there was a lot of stop pointing, you can see. So it took me out, 160 pips loss. Okay. So, if you are someone that you notice that, okay, there's a lot of there's a lot of gaps already. If it's above 100 pips or 120 pips, depending on your ratio, on your risk ratio, you might just not trade it, right? And then, okay, this was, sorry. Okay, so this is what I'm talking about. So I entered here. I've seen the first candle close into my 13 EMA. Then I wait for a second candle. Very important. This second candle is very important because this second candle, if it goes up, right, instead of coming down, if it goes up, it means that the trend continues. So you just enter another buy and put your stop below. Right now, in between all these junctions, when you have taken this trade, now look at this one. This particular point, it shows like it wants to reverse, but what? It's touched this. There was another one, it touched this. When you see that this touch and reverse, in fact, when you see this another engulfing candle, just place your buy. If you can, place your buy. You don't have to. If you already have a trade that is running, right? Just place your buy. You don't have to add another position. You can just place your buy here, put your stop loss here. If you place your buy here, your buy has this open, which is that's the open of, let me close this again. Let me see. Okay, yeah. So if you're open of 24.16 and put your stop loss below here, at this 24.04, which is that's 120 pips. Okay, it still falls beyond and within my risk ratio, my risk system. Okay, 120 pips, I can risk that, and remember that I already took a buy here, right? So if I'm taking this kind of trade, I'll put my stop loss at break even for this first trade and take this, okay? Buy here, put my stop loss here. As it mounts up, now you'll be noticing this thing. Now this comes like this. Before this candle went up, it first what? It did as if it wanted to reverse. It touched your 13 EMA and then it bounced off again, right? If you are lucky to spot it, you don't have to enter all the trends. You don't have to enter everything, right? But if you are lucky to spot this, enter buy again. Maybe put your stop loss here. But you must have a definitive place. Personally, I like to close my trades where at liquidity regions. When I say that I'm already in profit, I just, okay, where's the liquidity region here? 24.50. Close it. Give it a 24-hour treatment. Maybe you don't trade for the next day or so, right? Okay, see what happened here. So if you are someone that maybe you missed closing your trade from here and you want to know, okay, maybe I want to close my trade when I see that the market is about to return to another trend. So this is a good place to close your trade and then enter a sell. Put your stop loss here, right? Enter a sell because what this has closed, the first candle, it closed into your 13 EMA. And then the second one closed into your 13 EMA. It's this second one that I used to confirm on 1 hour time frame. Very important. So, like I said, I took this trade, but this was too much. I could have put my stop loss here or here, right? But I just felt like, okay, let me give it enough breathing space. So it was disastrous, right? This took me out. And then look at what happened again. It happened again, closed. There was this close below my 13 EMA, and then this also closed below my 13 EMA, but it ended up, I think I took a sell here. I can't remember if I took a sell here. Then I placed my stop loss here. Where was my stop loss? Stop loss is the high here is 24.62, and the open here was 24.39, which was I didn't take this trade. I didn't take it because it was too wide, so I didn't take it. The stop loss take profit guide, this is about 230 pips. It's not worth it. Okay, so look at what happened again. Now these are you spot your trend, the market, that okay, this trend is about to happen. Now this, I couldn't catch this one early on Friday, and it was so painful. You know, there's a lot of, when there is a lot of manipulation in the market, you tend to see this kind of nonsense. So I think a lot of people must have blown account on this day, right? Look at what happened. It came, whenever you are seeing this kind of thing, you feel like, okay, it has been bouncing, definitely it's going to fall. But look at what happened. They stop pointed a third time. First stop point, second stop point, then the third one, boom. And see, but see what happened. They created a reversal candle, and this was a 3 p.m. candle, our Nigerian time. And then what? It came down. This single 1 hour candle was from high to low, was almost 500 pips. Yes, this was 460 pips in 1 hour. I remember I saw the 15 minutes, and it was the 15 minutes candle was about, it took about 300 pips at once. You know, just closing off the progress it had made for 2 days consecutively, just with 15 minutes candle, right? So it broke in here, pump, and then see what happened. Of course, you take your sales. What I'm trying to paint here is that, okay, you take your sell when, you take your sell in this case, when you see that there are 2 candles close below your 13 EMA, in this case, 2 candles close below your 13 EMA, right? But you can see for this one, this candle was too big, right? So there was, the place you are supposed to put your stop loss is too wide. So you couldn't have, only if you're able to spot this very early, maybe on 15 minutes, you know. But judging by using only 1 hour time frame, it's a sorry case, you know, it's a sorry case. Just leave it as it is. So see what happened, bam, and then see what happened again. You can see that it came again. The next 1 hour came and touched it's penetrated into the 200 EMA, right? So let's assume you're able to even catch the trade from here, and you put your stop loss somewhere here. Let's say you're able to catch the trade from here, and you put your stop loss somewhere here. The stop loss is about, that's 86 pips, and then you take your profit here at 262 pips, 86 to 200. That's about 1:3, which is good, more than 1:3 actually. Take your profits and leave it. But see what happened. There was this bam, and then this big reversal candle. Now, if you're able to take this is actually too dangerous because this is when this candle closes, it's touched your 200 EMA, and then when it closes at, the candle closed at 2433, and the low is 2410. So if you want to take this trade, 2410 to 2433, that's 230 pips. It's not worth it, right? So that's the calculation I use. If it is good, if it is extending beyond 120 pips risk, it is safe not to take that trade. To be honest, don't take it, because what's your target? A typical good trade, you should be able to, if you are able to use this system of risking 100 pips, you should be able to make at least 300 pips from it. 1:3, 1:4, right? So please and please, I want you to take advantage of this. And so that's just, if you backtest this strategy very well, this method, this system, it backtests it very well. You see that it happens a lot. Now, in this kind of case, when you see this, now, okay, this is what I'm talking about here. This is what I was talking about. Look at this now. You know, there was this reversal pattern. Actually, I took this trade also. I made about 300 pips on this particular day. The market has been buying, and then it came here. Usually, there are times I'm able to spot my reversal candle early. if I see this pattern, and then I see that this closed below the bullish engulfing that has happened here, I just take my, in fact, I entered with a small lot size here. I entered sell. Now, remember that it has not yet closed below. The normal thing is that I should have entered here. And when it has come here, and then when it has closed, the first candle has closed below my 13 EMA. That's yellow, the yellow EMA, the yellow moving average. The first candle close, and then the second candle close. This is where I'm supposed to enter, right? And then I put my stop loss somewhere here. Let me check that out. So if I enter here at 2408, my stop loss should be somewhere here 2419, 110 pips difference, which is not it is not so bad. 110 pips is still within my range of risk. Okay, but I was able to spot this here. Actually, I think I used my 15 minutes to spot this. So when I saw this and I saw this close, this was I entered at 2419 and I put my stop loss just right above here, 2431, which is about 120 pips. Yes, it was still within my range. I entered with my first entry here, and then when I saw this, I entered my second entry here, pump. And see what happened from this place to my 800 EMA, bam. If it happens on your 800 EMA, normally, see, if the market moves, what I've observed with this system is that if the market has moved big, within a short period, this what was this thing? Let me check again. 2408 to this is 2378. That's about that's about 330 pips thereabouts. That was the gain here. But more than 300 pips alone from taking this trade, right? So this is a wonderful thing, right? It's a very, very good thing. If you already take this trade, you don't just leave the market for that day. This happened in the midnight. Many people must have slept, I remember the person one of my Signal members that I sent this to, that took this trade, he messaged me around 3 a.m. telling me that he had, I think it boosted his account. So he was kind of happy. I saw the message early in the morning anyway. So when you see this kind of stuff, I just think, just leave the market. For that day, it was a big move. Then look for another way to capitalize. Now, look for another reversal pattern. Now, I told you that, okay, you enter your trade, you enter for your sell when you see that what the EMA, your candlesticks have entered, it has penetrated into the below the 13 EMA 2 times, right? It has crossed the 5 EMA and penetrated into the 13 EMA with 2 candles, right? And then take your profits at the next EMA, 800 EMA in this case. That was where it took it, right? Now, where do you enter your buy? Where do you enter for buy in this kind of case? Look at it. You enter for your buy when you see another candle reversal. You see another reversal into your, just above your 5 and 13 EMA, right? So there were 2 candle reversals here. Look at it. 1, 2. It entered here. Now, for a person like me, I would have been skeptical of this trade, right? I didn't take this trade that day, I remember. But I still believe that probably we are still in a sell zone. We are still in a sell position, okay? And as options can actually be very costly in this market, okay? So I didn't take this trade, but it's better not to take the trade than to take an opposing view, especially if it is not clear, right? So I think I left this trade. I left it. But look, the first candle closed above. This was an engulfing candle. Look at it, beat all these 1, 2, 3, 4, 5, 6. It beat about 18 different, about 10, more than 10 candles. Yeah, this is an engulfing candle. And then the second one. If you can't take it, if you can take it, just take your buy. After the close of this candle, take your buy with the open of this. The open of this candle was 23.74. And then what was the low? 23.55. Okay, that's quite a lot. That's about 190 pips. Okay, so if you don't want to enter it, it's actually valid, not for you to not enter it. So you can wait till early in the morning and see what happened. It still maintained that momentum above your um above your excuse me, above your 5 EMA and 13 EMA, right? You can see already there was a crossing here. If you have woken up at this time, this is around 8 a.m., about 7 a.m. our time, right? You enter your buy from this place. That's at the open is 23.71, and then the low here. Okay, for those who might be wondering, I'm checking the data window. I'm just placing my candle, my cursor on the candle, and then I'm checking my data window to see the low and close. So the low here is 23.65. So open at 23.74, low at 23.65, 23.65. That's the difference of 90 pips. It's still within my risk range, my risk appetite. Okay. So I take this trade, and then what else am I? I'm targeting my what 200 EMA. So you will notice that there is this kind of romance on the 1 hour time frame. There's a romance between the 800 EMA and the 200 EMA, with the 50 EMA serving as the referee, right? It serves as a place for bouncing off and bouncing up, right? And I want to say something that, see, it's actually better not to take your trade within, like, don't take your entries. If you can avoid it, you can be very careful. Don't take your entries within the Asian range. Your TP can happen inside the Asian range. Well, maybe you don't take your trades inside the Asian range, right? Number one, the Asian range can be very slow, and then before you wake up, because I've seen that it has frustrated you a lot. So sometimes it's not worth it, to be honest. Okay, so I would like you guys to backtest this very well. Backtest it. I believe you are going to enjoy the dynamics. Now look at this also. Okay, I told you that on the 1 hour time frame, your 50 EMA serves as what the bouncing castle, more like the bouncing castle, right? It's like a referee, right? So if now look at what happened there. There was this big bullish bearish engulfing candle, right? If you enter your sell here, which is right. Now you put your stop loss above here. Your stop loss is here, the high is 24.83, and your entry is at 20, what's the open? 24.63, which is quite wide. That's about 200 pips, right? You might not want to go into it. And then for a person like me, I didn't take this trade. I remember I didn't take this trade, and we made a lot of money taking this trade eventually. I didn't take this trade because I knew that definitely my 50 EMA will bounce off. There was going to be a bounce on my 50 EMA. So there was no need taking the trade. There was no need taking the trade. Okay, so, and this was happening around just towards the close of the New York session. So there was this bounce, and then I knew it was going to present another opportunity, right? And see what it did. So I entered here for sale. So there was this, you can see this reversal. The inverse, what do they call this? The tombstone, right? And then there was this. So the first candle closed inside mine. Let me expand this. I'm gonna locate it. Okay, where is it? Where are you? Where are you? Where are you? Okay, here it is. So the first candle closed just the tiny bit, closed below. It closed below this 13 EMA. Actually, if you have seen this reversal, it is good, right? You know that sale is about to happen, but just to double confirm. So there was this close, and then this one confirms that this was a close below the 13 EMA. I placed my sell here at the close of this place, 24.64. Yes, that was exactly where I placed my sell, and I put my stop loss here at 24.75. So that's 110 pips risk. And then what? You can see, of course, the market prefers doing younger now. Like I said, it bounced on this EMA, but when I saw that it has bounced the first time, the second time, even if it's going to bounce the third time, even if it takes me out, I know that it definitely is still going to come down, most likely going to come down, right? So it's just like a fail-proof stuff. You just know that it's a magic that is bound to happen. So it came here, bounced again, and then see what happened. This was where I took my exit from the market. I took this was yeah, this is about 440 pips. That was what I made from this trade that day, right? In fact, I think I still made, I can't remember vividly, but I think I still made more than that, because when I checked my 30 minutes, I think I took my take profits from the 30 minutes. But it was a beautiful write down. So 440 pips, you risk 110 pips, make 440, that's 1:3. So there's a very good guarantee that if you take this trade, especially if you take it within the London or New York session, and your take profit is happening anywhere, either the Asian session, London session, New York session, you are going to make 1:3, right? You're going to make 1:3 on it. So there's no need to panic. If you can backtest these, practice it. Don't be perturbed, And of course, it's a swing trade moment, it's a swing trade stuff. Yeah, it gives you peace of mind, You don't have to be entering the market every time. Just wait for the right setup to happen and take your trade. 1:3, guaranteed, bam. And it happens within 24 hours mostly. All these trades I've shown you now, that's happened within 24 hours. Maybe the maximum is it has happened is maybe 36 hours thereabout. So it's a very, very interesting stuff concept, right? Look at what happened again. Okay, I think I've shown you this. There was this penetration, double penetration into this place, right? Come here and then take your profit here. Enjoy life. All right. So please backtest this again and again. Now, when you see this now, I love this kind of trades. In fact, I'm praying for this kind of trades to see this kind of trades again. The kind of stuff I'm seeing here, right? There are times that the market is just on the is on the roll, right? You just see that it's bouncing off a particular point. It's bouncing off. It takes a break, comes here. Whenever don't be moved by this kind of stuff. That's why again, it is cases like this that make me, because of situations like this, that make me tell you that you should wait for two candle close below your you wait for two candle close below your 13 EMA, right? Now look at this. When you see this kind of stuff, just know that okay, it's about to go down, right? It's going to sell. But look at what happened. It came down, bam. This is a bearish engulfing candle. But the one that came here, it touched it and it bounced back, right? It bounced back. If you are confused about this kind of trade, just number one, you can decide to leave it. You can decide to leave this kind of trade, or you can take it if the stop loss is minimal. But you are dealing with money. So look at this. It's touched this. This is the low here is 23.49, and then your entry for buy, the entry for 23.61. So this is about 120 pips, 120, 130 pips, not bad, right? If you take it, okay, just know that okay, your stop loss, know that you're just risking, even though you don't even know where your stop loss, where your TP is going to be. You can put your TP at this region, the the next liquidity region, right? That's 23.91 in this case, 23.91, 23.92 thereabouts, right? And you're taking your buy from here. So that's 30 pips. So you're 300 pips rather. So you take your at 23.62, you are risking 100 pips, 110 pips to make what? You are risking 110 pips to make 300 pips. That's 1:3, almost 1:3. So if you are able to do this well, you know that okay, 1:3 is guaranteed within 24 hours every day, 1:3, right? So there was this bounce, it goes. Now look at this. This also happened again. It's closed below, but what? If you are entering for sell in this place, in this case, you might be wrong. If you are going to enter for sell in this kind of environment, you know, your valid, your bias, I mean, your understanding of the market for sell is actually valid here because you have seen closes below your two candle close below your 13 EMA, right? So if you enter sell here at what's this open? This open is 23.72. What's the stop loss going to be? At 23.86, 86 to 72, that's 140 pips, which is a bit above our range. 130 pips, 120 pips, 130 pips is our range. So you might leave this, right? Because it might not be worth it. And this is already evening time actually for your entry. So you might leave this because it's actually too much. Okay. And before you do that, you must, okay, where is likely going to be my stop loss? Where's my stop loss likely going to be? It's likely going to be within this liquidity region. Sorry, your TP rather. Where's my take profit going to be? Within this liquidity region of maybe 23.51. 23.51 to, so like 200 pips. You are risking almost, risk reward ratio is almost the same. It might not be worth it eventually. So you just leave it, right? But if you should take this trade, right? Where did I say you should enter safe? Okay, I think this is it. So if you take this trade, take your sell. If you have taken your sell, and then if you, number one, is not, like I said, it's not reasonable for you to risk more than 120 pips, right? Or 130 pips at most. It's not reasonable. This 140 pips, just leave it. But if you take it, if this happens, now this is a very, very big move. In fact, it might even cause slippage because this might be a news. It might be a news move, right? It might have caused slippage, so it could take you out badly. So just be. But normally, if you are going to take this trade, you don't even have to put your stop loss here. Put your stop loss here, the next liquidity region above it, right? So take your sell here, that's at 23.72, and put your stop loss above here. That's 23.81. 70, you just lose 90 pips here. Okay? By midnight. In the middle of the night, you'll have taken you out. Okay? Now see what happens. Bounce. In fact, except you are someone that is conversant with liquidity very well, you might not be able to catch this because this was a very, very, very massive move. You know, it first did like it was going to sell and then what? Down. You can see. So, so in this case also, look at this. So there was a lot of market manipulation here. Look at this. This was good for, this is good for sell. But where is your stop loss going to be? Now, if you are seeing that your entry, excuse me, if your entry is close to this 50 EMA, I will advise you not to don't even try to do it. Don't try to enter. Look at this. The entry, after this candle closes, the entry to this place is about the difference is about 88 pips. 88 pips to make how much? How much are you risking? Let's say you are risking, where's the next point of liquidity? You put your stuff here. That's 116. Let's say you decide to put it here, which is not actually very advisable. 62 pips. So 62 pips to 88 pips. It's about 1:1. Yeah, it's more than 1:1, but personally for me, but if I want to trade good, I'm looking at making at least 200 pips from the trade. So I would have ignored this. I might have ignored this and just wait for my bounce. Excuse me. Okay. So if I know that I'm anticipating for sell, just don't even bother. Don't bother. Just wait for this. If I see this bounce, it comes here, and then there's another candle that closes above the candle that caused the bounce. take your trade entry, put your stop loss here. Your entry at this place, open 2403, and then the low 24. So this is about 2391. So this is about 120 pips. It's still within my range. And then where is my target going to be? My target is going to be 2424. If I'm entering from this open 2403 to 2424, that's 110 pips. So I'm risking 120 to make 210. It's still okay. It's still okay. That's almost 1:2. Almost 1:2, right? And then okay. So I might take this, but you can see it's a long, quite kind of a long ride to freedom. So eventually it will hit it here. This is the candle that will take. This is the candle that will cause that success to happen. Look at it. Bam. Okay. So it was this candle that have taken me into profits. Okay. So you want to be very, very careful. This thing can be dicey. If the thing is, if whenever it is not going to work out, just make sure you have your standard risk. You are not risking more than what? You're not risking more than 120 pips. At most 130 pips. That's what you are risking. 120 pips, 130 pips. That's the most you should risk. And if you are going to risk that much, know that okay, you must make at least 1:2 or 1:3 from that trade. If there is no signal that you are going to make 1:2, 1:3, don't bother doing it. And if you see that okay, there's going to be your 50 EMA is too close to both your 5 and 13 EMA, it's better you don't take that trade, especially if it is sell, right? Like in this case, if it is sell, it's better you don't take it, right? If it is giving you sell signal on your 513 EMA and you see that your 50 EMA is close by, it's better you don't take that trade, or you just wait to maybe take a small buy, a short buy, and you close your trade at the liquidity regions. So this method is very, very good. This system is very good. It's something that I feel like you can combine with whatever strategy you use. I used this a lot, in the past 3 weeks. Of course, because of the stop hunt did not make me have a profitable week last week. That's myself and my team. But I guess it was because of the news, because there was a lot of manipulation that was happening, right? But overall, I've made 400 pips, 300 pips, 500 pips taking this, right? And I'm very sure that this week, by God's grace, I'm going to clear my I'm going to succeed with my what do they call it, my prop firm challenges. That the challenges I've been running with this, right? So that's it, guys. I wish you guys the best, and have a glorious and beautiful week.